With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello and welcome to the COB. I'm Nadine Blaney, and it is an absolute pleasure to be with you. Here with you, I should say, on this Monday afternoon, just past 4 o'clock here. And if you're catching up with us in podcast form, I'll get you across the final market close in just a few moments' time. But worthwhile checking in on the CBO Australia Index, which gives us a really good indication of where this market ended, and positivity right throughout this afternoon session. When I got on air at about 10 a.m., we were up by 0.8%, something like that. But we have seen the momentum really sort of continue throughout this afternoon. US futures are moving higher, and they have been doing so throughout the day today. Look, the consensus is, everybody that I speak with, we could see, don't think that today is the end of the volatility in general, but we'll take it on this Monday, up by 1.5%. So that is it, a bit of momentum this Monday after what was a very confusing weekend if you're trying to get a handle as to what the ultimate position of the US administration will be when it comes to tariffs and the like. Donald Trump today saying that tariffs on imported semiconductor chips will be coming soon, even as he's also thrown a little bit of cold water on that exemption we were told that would come through for some electronics manufactured in China. But look, it's a little bit difficult to know exactly what's happening. What we do know is that we've seen the miners, the gold miners, I should say, as we've watched the price of gold retreat from record highs, a little bit more nuance within that sector. But generally speaking, the big miners have been doing really well. So BHP up by more than 3%, Rio up by 1.4%, Fortescue 1.4%. We did see copper do really well in London on Friday. But to my earlier point, say Tony Sycamore from IG, just one of the guests we spoke with today, that said, everything asset-wise, markets are in a pretty precarious position, and I might get a view on that from my expert guest who's joining me in just a tick, David Scuddy from StoneX. I'll run you through the sectors quite quickly. We've got good gains being seen amongst the tech names. No big surprise when we saw tech in the United States looking a bit better, so follow the leader there. Here is what I was talking about, the gold space. So yes, overall, still pretty positive for gold, but we've got the likes of Ortobanda into negative territory, Mika Metals, some of the smaller players. But it's hard to argue with what you see on the screen there for Newmont and BHP, as I mentioned. MinRes gaining 8% to $17.97. So let's welcome in my guest, David Scott. He's joining me from StoneX. Okay, Scotty, hi. Good afternoon to you. As you look around this local market today, what are you thinking?
I'm thinking it's not going to last, if I'm being honest, but we'll take it as it comes. At the moment, you can see that there's a little bit of optimism out there that at least the really hard line from Donald Trump when it comes to tariff policy has not yet been, it's showing signs that he will go and be impacted by market movements. And I think for the time being, that's enough to go and reassure investors, at least in the near term.
Yeah, but there's a lot of uncertainty still around trade. China vowing to fight to the end. Pick your day, pick your hour, and that changes the rhetoric that's coming from the US administration. So safe to say this trade uncertainty has not gone away.
Absolutely not. And if anything, it's becoming worse. You mentioned about just some of the headlines that we saw over the weekend. It's nearly impossible as an analyst and a strategist to come up with something in the near term now, because it constantly changes all the time. You can see here on your screen, this is a conglomerate of a whole bunch of headlines and data releases have come out, written by journalists out there when it comes to trade policy uncertainty. And you can just see what we're dealing with right now. This is unprecedented levels that we have to go and face. So when you're going to apply that, you apply it to what's going across when it comes to asset valuations, which still, screen has been pretty stretched compared to historic norms. And that points to the potential that we could go and see continuation of this volatility. And there's also, this is another chart here, looking at the spillover effects into economic uncertainty, which, as you can see right now, sits the kind of levels that we've seen in the past that have coincided with a US recession. So lots of newsletter writers, lots of journalists are writing about uncertainty right now, which is not a good omen when it comes to the US economic outlook.
Yeah, no, that economic surprises chart is pretty stark because you're looking even at levels on par or slightly higher than COVID and the global financial crisis. So with that as the backdrop, Scotty, a lot of people have familiarized themselves more and more with the bond market as of late. How did it behave on Friday? What are the early indications as to what we can expect tonight? Because it will be so instructive how the US goes.
It is. Look, a lot of the problems, the digestion problems that we have with the market trying to go and absorb some of the selling that was coming through doesn't really show any evidence that we've had that resolved, even despite some of those other commentary coming through from Fed officials and rumors about the Fed really willing to go and step in to go and solve things. It's still where it was, where I was in Sydney when I was talking to you last week. So swap spreads are still deeply negative. To me, it's another one of those factors that suggests that the coast is anything but clear at this point in time. Until we get some really clear certainty, whether it's for the good or the bad, when it comes to trade policy in the United States, I'd imagine it's going to be the same. Then at least investors can go and make up their mind what to go and do. Right now, we're still seeing treasury offered. Yes, there might be coming through in Asia today, but I wouldn't read into that. Clearly, the trend right now is towards further losses and higher yields.
So when we think about GDP going forward, are we just baking in a recession now in the United States? How does that impact what we're expecting around the globe, Scotty?
Yeah, in the US, you look at that Atlanta Fed GDP now, forecasting model that comes up. And even now, when you go and strip out the effect of gold imports and the like, which have kind of skewed the data towards a very deep recession, we're still looking at a very minor downturn in the first quarter of the year based off data received to date. And then that's with all the front loading that we've seen and people going and trying to go and get ahead of this tariff policy. So I question what's coming down the pipeline in the US. And that's where the big concern for me is, where all this uncertainty actually rubber hits the road. What happens once we go past this tariff deadline into the second quarter of the year? And all this soft sentiment survey data we've seen recently that has been very, very weak starts to go and really be replicated by the hard data. That's my big concern at the moment, that we'll see a big drop coming through in that hard data in the not too distant future.
Well, especially when you consider, to your point, that we've heard that not just big corporates, but even smaller companies in the United States have been trying to front run, like get ahead of these tariffs and the tariff situation coming in. So yeah, an economic stop is being talked about. And of course, all of this is being reflected in the US dollar. I was reading a note this morning that I thought said it really well. That once global financial markets have seen the chaos really that's been unleashed by the US government, it can't be unseen. So that's why we're seeing simultaneously equities being battered, the US dollar being battered, as well as bond prices being, as well suffering. And it's this type of move that you see when it comes to emerging economies, not the globe's dominant force.
You're 100% correct. The US dollar used to be the world's ultimate safe haven, and I'm not going to go and say that it's never going to be that again, but in this current juncture that we sit at right now, it is behaving more like a riskier asset class, like an Aussie dollar, like a Kiwi would normally be when it comes to times of economic and market volatility. And that gives you a big sense as to where we sit right now. And the global investment community is going to where the capital is treated best. And right now, years, decades, you could probably argue that was taken for granted because of the reserve currency status of the US dollar. Now, all of a sudden, people are looking at how it's been treated and capital is fleeing. I think it's undeniable when you look at what's going on around other parts of the world, going into currencies like the euro, going into the yen, going into the Swiss franc. It's pretty obvious that people, for the time being, do not want to go and have as heavy exposure in US dollar denominated assets as they have in the past.
Not at all. But still, it's extraordinary to me to look across the screens today and see, all Asian markets higher. The Hang Seng's put on 2%. The composite is up a more muted 0.7%. But, everything is looking really strong, including our market here. You know, the S&P ASX 200 up by 1.3%. So what do you put that down to exactly, Scotty? Is it just some sort of a relief rally, just some sort of a dead cat bounce? Because I'm mindful of the fact that we're also in US reporting season, and while the banks reported pretty well, it's all very backward looking.
It is. We've reached a new paradigm when it comes to economic certainty, and that can't be reflected. So any guidance that's offered at this particular juncture is going to be pretty much useless unless they've got a really strong chance to go and have a talk with Donald Trump. As for the reason for the rally today, I think that we had that weakness coming through on Friday. And again, just going back to where we started the conversation right now, it's pretty clear that what we're seeing is that Donald Trump, when pushed very, very hard by markets, whether it's the bond market or sometimes potentially you could go and argue maybe the equity market now, is blinking on occasions. Now, of course, he's going to go and announce separate tariffs on those particular areas, the electronics that are being withdrawn for the time being, and we don't know what to kind of expect there. But it's just that worst case scenario. We're talking about 145% tariffs on Chinese imports. Now, I don't think we're probably going to be looking at something that aggressive coming through from the US administration when it comes to this new figure that comes through, whenever that's going to be. And I think that might go and explain some of the rebound we've seen, particularly some of those tech names in Asia. Maybe that's just a very, very glimmer of hope that potentially can be negotiated away, this potential threat.
Okay, so what are traders doing? What's a trader to do in this environment, Scotty?
Traders are going to where momentum is and where safe havens are. So it's pretty clear when it comes to currency markets right now, very, very strong uptrends in euro dollar, very, very strong downtrend in euro yen, Swiss franc as well. We're seeing a major breakdown in that particular area. So those have been very, very popular trades. Gold is always popular at this point. It had such a strong move to begin the year, and now it's just getting those safe haven flows coming through. And more recently, it's been really interesting today. We've seen quite some static rebound when it comes to Aussie and the Kiwi dollars. Very, very unusual given the environment, not just today, but over the past week or so. So again, that's one of those kind of counter trend moves that we're seeing at the moment. At the moment, though, it is very much a trader's market and it's very short term in nature. So anything where you're looking for swing trades over the space of days and weeks potentially, you've got to go and make sure you zoom a whole way out, because the signals you're getting right now, a lot of them are going to be very false.
Got it. Scotty, thank you so much for joining us on a Monday afternoon. We'll see what happens.
Pleasure to be here.
All we can do is sit back and watch the price action and make decisions accordingly. And I had a really nice chat with Richard Hemming from Under the Radar Report. He did talk about 3 stocks that he really sees as quality, 2 perhaps more than the other. I'm not going to give them away. You'll have to go and seek out that interview online. It's up there, ausbiz.com.au. But he started the interview by just talking about how he is approaching portfolio management at this time. And look, it all sounded like some pretty good common sense, including look for quality and don't make rash decisions. And what you want to do, well, I'll let you go listen to the interview and hear it from the horse's mouth as well. Just so you know, if you do listen to the COB as a podcast, you're missing out on a whole bunch of fantastic content if you don't visit ausbiz.com.au. We really enjoy making this content for you, and we love that you can go to our website and catch up with all of the fantastic interviews that we do throughout the day. Each day on the call, we pick a stock of the day. Today, I chose MA Financial. So it staged a bit of a turnaround in afternoon trade, gaining, I think, more than 2% by the end of the session. It was after a quarterly operational update came through. The company also updating the market on how it sees itself performing if the volatility is prolonged. I spoke with Lou Clarative from Seneca Financial Solutions and Philip Pepe from Shaw Partners.
I'd be relatively confident in the credit quality they're running throughout their book. But I do think it might get tougher to chase inflows and maybe replace some of those assets that they have sold and transacted on with new money. So, look, I'm not saying that it wouldn't be probably a decent buy around these levels. We have owned it in the past and done well out of it, but I think maybe some of those tailwinds are fading, and it is sort of a premium price growth non-bank financials. So, yeah, definitely needs to be growing and needs to be adding to those that AUM all the time. So probably just hold from me.
It's come off and it's probably come off for unjust reasons versus, a Breville or someone who's directly exposed to the trade war. So this could be a good opportunity to buy a company like this that has just had a pullback based off fears that, personally, I do think the tariff issue is a negotiation gone bad. It will get back on track, and we probably won't get 100+% tariffs between China and the US. Hopefully, eventually, potentially good buying opportunity. 12.5 times with an appropriately phrased outlook statement. I'll call it a buy. Good entry level for those who focus over the medium term, not the short term.
So that was a take on MA Financial. You can listen to, again, their entire assessment of the company if you go to our website. Stock of the day is posted there each and every day. MA Financial Group finishing the day higher by 2.4%. I wonder where that leaves us for the market leaders. Look no further than Neuren, up by a really stonking 22%. What happened was it got the US FDA to sign off on the outcome of one of its key drug trials, which means that it looks like it will be approved later this year. So that is one of those binary outcomes. If it comes through, if the FDA is favorable, these share prices rocket, because it's also got commercialization of its product for another disease already bringing in revenue. And actually, Neuren was a bonus buy coming from Luke Laird, who you just heard from Seneca Financial Systems. So the episode of the call is up online as well. Look, that's interesting. SiteMinder is up there. Don't see any news. Stanmore Resources. So coal up by 8.5% to $1.78. Clarity Pharmaceuticals, also a question on the call today, up by 8.4%. I don't want to give it away, but didn't get as much love as Neuren. Let's just put it that way. Let's flip the page, see what was weighing on this market. And of course, this is not by market cap. This is by percentage terms. So we've got A2 Milk, one of the worst performers. ResMed, I read a note from Citi today just flagging that there could be a short-lived sell-off once we get the trial results from Eli Lilly's new weight loss drug. So I would imagine that would be what was weighing on the stock, although Citi still has a buy, I should say, on the company. The Digico Infrastructure REIT Challenger also on the call today. And Ansell was off by 1.6%. So we'll go to the smaller end of the market now as well and do the same thing with 360 Capital up by 11%, Aurora Biosurgery up by 10%. Those that were weighing on the small to mid cap space today, Trajan down by 7.4% to 75 cents per share, and Vinyl off by 5% to 10 cents. Imricor Medical Systems down to $1.40 today. We've got the COB happening now. We've got consumer inflation happening tonight. We also have a bit of Fed speak out as well this evening. So we will be keeping our eyes trained on any sort of nuance that these Fed speakers can give us when it comes to expectations for the path of interest rates. The Fed put is not a given, especially if we consider that we could see some inflationary pressures coming through as a result of these tariffs. But I think also I did have a little look at the calendar of results coming through. So today we get Goldman Sachs. Looking forward to Citi and Bank of America tomorrow. We are also anticipating we'll see Amex and Netflix, which will give us a good read into the consumer come Thursday. So a big week for U.S. quarterly reports. Also, we have a Bank of Canada meeting and we have an ECB meeting coming on Thursday as well. Tomorrow here we get meeting minutes from the RBA. That'll happen at around 11:30. So today we saw a pretty solid session. The S&P ASX 200 up by 1.3% to 7,749. We saw Domain rising as Morningstar lifted its fair value estimate. Also, REA climbed as Morningstar said it is resilient against competition. Morningstar also saying that Aussie tech stocks offer relative safe havens as we see the sector do really well today. We actually spoke with Morningstar today. Lachlan O'Halloran joined us. If you'd like to check it out online. It's there. I actually think that one might be in the COB newsletter. If you don't subscribe to that, always worthwhile. I think we've had the strap up at the bottom of the screen to tell you how to do so. I'm full of public service announcements today. Look, tonight will be interesting in the United States. I think that goes without saying. And we will bring you across it all from 9:45 in the morning. See you then.